Hello and welcome to another MCO update on the DXY. Guys, we're reactivating this channel. Let me know in the comments if you like that. So we wanted to start here with the DXY today. And we take a look at the long-term chart for the DXY. And I mentioned in many of the previous updates that there is a case to be made that in the current price region, a low forms. I mean, talked about that on other channels, but we want to get it back here to the Forex channel. By the way, also let me know in the comments which other Forex pairs you would love to see on this channel, because essentially this is a channel for you. We don't, there's no paid plan or anything for Forex. It's just all for you guys here. So let me know in the comments what you'd like to see. Now, looking at the larger time frame chart, the thesis is, and that's been my thesis for quite some time, I mean, that we are in this correction. I mean, funny, I haven't double checked, but I'm pretty sure in the last videos here on this channel, which was like 9 months ago for the DXY, we talked about, or in the last videos, we talked about this larger correction, which should ideally form an ABC structure. And we've been tracking this ABC for a while. And the idea was always that we get into the mid $90 region. So we're there. And I'm not, I'm not necessarily assuming that we go to a new high from here, even though it's possible, but at least that a long-term low has formed, or is forming, in the process of forming. We will see on the smaller time frame that there's currently limited evidence only that we have actually formed a low. But look, we've reached this macro trend line, highlighted in blue, which is coming in roughly at around $96, plus minus, depending on how exactly you draw it. Small differences on the smaller and the larger time frames as well, but sort of $95 area, mid $90 area. So we've reached it. We've also reached a 38.2 retracement, also not touched yet. So one more low, from a technical point of view, one more low would absolutely not be a problem. And also the smaller time frame shows us that one more low is absolutely an option. Now, interesting as well, this correction, which we're tracking as the A wave of a wave 2 correction, basically, in other words, the first wave down or first leg down of a larger correction. By the way, a correction is forming a 3-wave move, typically. So we have this as the A wave. This would be the B wave, and then the C wave. That gives us our 3 waves in a correction. Now, the idea is that a B wave bounce could happen. Should take us into this resistance area, potentially, long term. That can take years, guys. Yeah. Or, if the structure is viewed as slightly different, this would be wave 1, wave 2, wave 3, wave 4, wave 5. Yeah. Basically, one more high in this larger degree, wave 1, which presumably topped in September 22. I'm going to mark that here with a question mark in yellow. Yeah, but very likely as well. So either way, this is a zone where I'm watching for a bounce, for a reaction, for an upside reaction. But you can see that based on this, while there should be potential for a bounce, the dollar is not out of the woods yet, okay? So the dollar could spend time in a long-term range, as you can see. This B wave might not take us to new highs. It could do, but it might not. And then there could still be that C wave. We won't know that until we see more of the structure of the rally, of the advance. But the idea is that over the next few years, possibly 1 or 2 years, we get at least a sizable corrective bounce labeled white wave B or yellow wave 5, yeah? So let's also take a look at the smaller time frame. We're going to zoom into this structure here. So let us take a look. This is the zoomed in perspective here for the DXY. And you can see that, man, yeah, here there is a potential. There is a potential for a low, that the low formed in September. But the orange pathway here shows us how we could just get one more low. And if we get one more low, it's the area around $94.80 to maybe $93 as next downside projection targets. So if we look at the DXY here, I mean, we're currently looking, I mean, that's why I said limited evidence. We only have a 3-wave move up from that September low here. 3 waves up. It can turn into a diagonal pattern. So if we get 5 waves up, I would call that a 5-wave move. And that gives us the first wave of potentially a larger recovery rally. That can then take us into at least into the resistance area that you saw in the larger time frame. After 5 waves up, we typically get a corrective pullback in wave 2 before we go higher. So basically now, this is a key pivot. Normally, in such a wave 4 pullback, we should see a reaction before the price breaks below the 61.8 retracement. In this case, that level is at $98.10. As long as we're holding it, one more high appears likely. And we can really only expect a higher low to form in the next larger pullback, here wave 2, once we get 5 waves up. At the moment, it's nearly 50-50 because we have a 3-wave move up from the low. That opens the door to further downside. Yeah. But obviously the macro suggests we could have formed the low already. But the macro also allows for one more low. And we have a 3-wave move down into support. So had we seen 5 waves down, it would be more clearly bearish. So it's kind of this area where the bulls need to show up to give us that 5th wave. I think at the moment it's looking good from a bullish point of view. But yeah, and we also have a reaction, a first reaction here to the 50% retracement at $98.39. So that's what we're tracking at the moment here on the DXY chart. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, feel free to, join this channel, or not join this channel, but just subscribe and let us know which other Forex pairs you would like to see. Thanks so much. Bye-bye.